Hello, hello, hello. Happy Thursday, everyone. How is everyone doing? Good morning, John. Good morning, Patrick. Good morning, Sterling. Thank you for putting in the PPI stuff, the unemployment stuff. When one of the reasons is Israel going to go after Iran now because crude's going, well, a little pullback today, but crude yesterday went on a tear. What else do we have going on? Good morning, Bull Strike Cheetah. Let's see. Wells Fargo warns of narrow S&P 500 rally. The breadth has not been good. I agree. Good morning, Anissa. Their 2026 S&P 500 target is 6,400 to 6,600. Okay. Good morning, Harold. Good morning, OD Green. Again, thank you for tuning in. Good morning, Jacob. All right. Lighter morning this morning. What do we have? We have PPI coming in, a slightly better consensus, bounce from prior. By the way, March and April were both revised higher. So we'll have to see if May gets revised higher also. Core PPI year over year, headline number coming in at 3 versus consensus of 3.1, down from 3.2 prior. And the PPI year over year is coming in 2.6, up from 2.5. Good. I say good morning to Jacob. Good morning, Royal Palms. Good morning, Ted. Can we remind me? I understand the lack of breadth in principle, but if the overwhelming majority of companies below the 200, doesn't that mean there's more room for upside? If they can actually, there is room for upside, but they have not achieved it. So you can't just look at it and say, oh, because, it's across the board breadth. And one of the things I focus on, I won't put it on here, but one of the reasons I put this up, Fear and Greed, is you can keep it here. The McClellan summation index, you can see on this continued rally. All right, you can see how we were stronger and now it's starting to fade. And the overall, we're near some high areas from before. There's a number of ways to measure that, and they're measuring it with the peak above the 20 and above the 200s. Yes, there is room for them to run, but if they've not achieved it yet with this strong a rally, it means you have limited. You don't have the full market participating in this. We'll get to something else in a second. This morning, Oracle, after a earnings beat, is up over 8%. Boeing down after the tragic plane crash in India, down nearly 5.5%. Chips down today, but Broadcom, don't know if anybody got to take advantage of that double we talked about yesterday. We can also take a look at that. Groups, real estate, healthcare. So this is sort of a risk-off day, we'll say, because they're rotating into like basic materials, healthcare, and real estate. Industrials, consumer, cyclical, and comm services are all down. You now have the rate cut in September and October. So still two cuts, but the cut bumped up from December to October after that PPI information. Still in greed mode. Schiller PE 37. God, the market is just not cheap. And anyway, after the close, we got Adobe and Restoration Hardware, and then tomorrow, I've never even looked at Money Hero. So, who else? Hello, Charles. Good morning, Rick G. Good morning, Tony. All right. So, what was I going to? Let's just take a quick look at something here. All right. See, also you can see something here, Sterling. This is the equal weight ETF for the S&P 500. Compare that to the spiders. So look where the spiders are, okay, which is cap weighted versus broad index also. See how much it's lagging? Another thing I keep an eye on. Also, this has a really nice double top. But before we get there, watching to see if we trigger this little rising wedge. We have cycles rolling over again on the daily, the weekly. We're still back at the top area, but this could be a pretty interesting weekly bar. Now, am I watching for a major pullback? No. I'm going to be watching for, we could even get back below the daily rotation zone, back towards the 200, back towards the prior break area, back towards the rising 50, back towards the projection line on the break from, that was the top line from the wedge, and that's copied and moved to the bottom. That's your full target on the wedge. Okay, so we have a lot of things rolling over. We again have DeMarc 13 setups. Okay, we have end of potential wave 5, a minor wave 5 for Elliott fans. So we have a lot of things that we could get a pullback on. We could easily pull back. Now, I mean, that could be a pullback to, 5,800 to 5,850 maybe. That's not a huge pullback. I mean, people will make a big deal out of it, but that's not a huge pullback after this massive run after the tariff tantrum. So that's what I'm looking at overall today. I'm keeping an eye on this 59.95 level. That's still the key level. We start breaking below that, you're into a little clear path move. Technical target on that is about 59.40. The next bigger support level is back at 58. The first one is 58.62, but there's a ton of support down here. There's a ton of support over going into next week. That's what I'm going to be watching. To the upside, if it does hold, there's a pretty key resistance about 60.40. 60.40 would be a key target area on any bounce I'd be looking for. Formerly known as a guy with the password. The password you put in yesterday. So, that's where we sit. Charles says the NASDAQ is confused. We still have, now this got into a wedge pattern a bit better. So keeping an eye, now this was weaker than the S&P's wedge, but look at where the target would be on the wedge down to bottom of the rotation zone. So going to be keeping an eye on that if the wedge does trigger. First key thing, though. First key thing. Your real breakdown level is right around 21,715, but I'm going to start focusing on about 21,782 still if we start rolling over from there. On any bounce play into the open, you're looking right around 21,950 to 21,960 as a key target area on any bounce play. The Dow, again, not much to talk about with the Dow, so I'm not going to waste my time. It's just sitting in this grind higher consolidation. Russell, remember I told you my target, the 62.5, the 200 area, and we have a harmonic right there. All that triple cluster spiking up there yesterday and reversing, and now back to the daily rotation zone. If we start breaking down next week or tomorrow below 21.26, I'm focused on 20.96 as the first key target. Again, we hit a minor top there. We are coming out of majorly overbought conditions and daily cycles rolling over. So on any rally, this is where I'd use a secondary, the bounce harmonics, secondary reaction harmonics, and specifically pay attention to 21.59 to 21.68 on any bounce if it does manage that. The VIX, little pop up today. Little pop up, but nothing significant. I'll start sitting up and paying notice for the bigger pullback if we start getting above about 1980 again. DAX now breaking below the rotation zone, which is rolling over. So I'm going to be watching for on any rallies to for rollover plays and for this to reconnect with the 50 and near to the spike low from Friday the 23rd. The yields are pulling back after the CPI and PPI. I'm going to be watching today how it closes at 4.37 approximately. But we're still in a massive consolidation pattern. So, still going to be watching for more bounce plays in the yields though. but nothing yet. Dollar index breaking down. Rotation zone did hold. We did not get any little buy setups I was watching for. Now we've broken down, coming into the 97.02 harmonic area. Is this massive double, the weekly double, invalidated yet? Well, it's not ever triggered, but is it invalidated yet? No. What would be interesting is if there is military action against Iran, what the dollar does then. So that is key. But there's this 97 is the next key level. Still trading down. No bounce pattern yet. Crude spiking up. Going to be watching how it closes this week, because this could trigger. It came up to the 50-week EMA and the key closing area from back in March before the strong reversal. So coming up right there and pulling back a bit, but this looks like it's going to trigger this double bottom, this one right here. You can see it right here, because this is the move that started it on a weekly basis. So could we continue to see higher oil prices? Yeah, I'll start watching for pullbacks as long as this double is not invalidated. But in the short term, now the prior resistance area, about 65.85, turns into a key support on any pullback. So that, oops, wrong one. Wrong one. I want this one to remove. There we go. So, what else? Yeah, Apple is down 9. Is it down 19 year to date? I haven't measured it. You're probably right there. The ES looks like a 4-hour head and shoulders. Let's jump back there. I'm just watching the wedge. Yeah, it's a little sloppy and extended with this right shoulder. I'd rather trade it at. You could use that as minor targets. It's a little sloppy though with this setup. Is there a percent B buy trying to trigger on natty gas? That would be a percent B buy in consolidation. So yeah, you can watch in relationship to yesterday's high, but that would be for a minor bounce play only. Again, it's got to follow through and close above yesterday's high. Why does Israel announce an attack just as the market is trying to top? Does life in a tight art, or the other way around? Oh, okay. So we got the pullback in gold and the rotation back up, rotation zone holding. And remember, I said don't short that. Well, I can't tell you what to do, but I would not be short that. And rotating back up, I'm still watching for reconnection with the 87.5. This 34.61 again. Silver completed its double, which we talked about using that for potential pullback buys areas and spiking and completing its double. And now the rotation zone is holding. So now I'm going to be watching again the secondary reaction on this one. For any buys, the key thing, it's got to get above. It's got to get back above roughly 36.50 on a closing basis. That's the secondary reaction rule. And not much to talk about with copper. Platinum might be setting up a minor topping area in the short term. Euro still, we do have the massive potential double top on the table. Spike up next to the 116.36 harmonic. It didn't quite get there. It got to 116.31. Close enough for my book, but the double's not invalidated yet on any pullback now. I'm watching to see if a 115.20 area holds. Spiders, again, wedge. On the spiders, we'd have to trigger it on a close below about 597.90 because with the rotation zone right there. Trading pre-market, it's 600. So on any rally, gap fill to 601.36 would be the key. again, that first support area, watch just below 598 for support. If that does break down, then my targets I'll be using are 592.71, and then closer to the bottom of the rotation zone, about 589, 590, and then the full target for the rising wedge. Those are the targets I'll be using on the rollover play for that. The NASDAQ, early warning signs, we start getting below about 528.80. And then the true technical area on the wedge would be about 526.50 area. So those will be the levels I'm watching for. We're gapping down today, so on any bounce play would be to 532.41. What is your preferred way to get long the U.S. dollar? Just depends. I don't really have a preferred way because I'll start looking at other, like if I want to get long the U.S. dollar, I might also consider getting short the euro, depending on the setups there. I don't really have a preferred way. It just depends on what other setups are in play. What else? We want to UNH. UNH, trying to put in a base here. Trying to put in a base. Again, you didn't get a bigger pullback here. Pay attention to about 322. 322 would be putting in something there for a return to the weekly rotation zone with cycles coming up. But this is just not a strong bottom yet. So my targets would be the weekly rotation zone to the upside on any break above about 322. Today feels like a Friday. I wish it was a Friday. No, guys. Here you go. There's your double. And this is what we talked about yesterday. I said I was looking more at Broadcom versus NVIDIA. Double completed. If, again, I've been asked, well, if you want to roll something beyond the targets, that's fine. What would be my next target area? The 50% harmonic from the retracement, which we hit, spiking above, but look at all the key closes right there. Now, again, the doubles played out. The next target. So if I had something left to remain long, all right, first unwind area was the end of the double to partially unwind. Next unwind, if you're trying to go for a bigger thing than that, would be the 50%. And the next key area, I'd be watching. Now, this is not where I'd take something off. But with a remaining position, I'd be looking for a close above 256.31, and I'd be trailing something. Okay? At least with a break-even stop at this point for the double. And it did give pullback opportunities on the open to get in it, by the way, yesterday. But the next key area I'd be watching is a close above 256.31. And then I'd be looking at, for me personally, for the gap fill, if we're able to get that. Now, if it comes back down, goes at least, worst case scenario would be a break-even stop on the remainder area. That's how I like to structure things. Now, if it makes a topping pattern in here, again, then I would exit. Then I'd be looking to exit. We have a sloppy inverse head and shoulders, but that's not the strongest pattern right there. What else do we have? We have Tesla. No close above the 62.5 yet. No close above the 62.5 yet. Little gap open and a reversal there yesterday. But on any rally would be to the gap fill. Other than that, the support area now I'm watching again is right about 310. Nothing really to talk about with NVIDIA. There is a little wedge pattern in this too, and still a potential double. But it's turning into a wedging double. A wedgie double. So, going to be keeping an eye on that also, because if NVIDIA rolls over, it'll probably trigger the wedge in the S&P and NASDAQ. All right, let's see. Didn't see any other requests. Amazon. Amazon pulling back into the rotation zone after hitting the second target on the double. That's another thing I'm looking at there. Let's see. Is Apple, we had down 19%? Yeah, it would be. Down 19%, but still in this big consolidation range. I'm still watching close below 193 for the breakdown play, the next breakdown leg. But yeah, look how far Apple is. Apple has fallen. The Apple with their big, let's see. That's down from the highs. It's down about 23% there. I wanted to ask yesterday too late question on how to use a tick intraday. Well, I watch the trending nature of the tick, whether it's making higher highs, higher lows. I watch for spike reversals in the tick, like when it spikes above 1,000 or below minus 1,000, we can have short-term stall outs in the trend moves. But then I watch for stuff like yesterday, just very, very choppy. So this is the kind of thing that's just support resistance, not really a trend day. Okay? But when we start trending and making higher highs and higher lows and edge up, then I'll start that's supportive of the trend. Watch for reversals in the lunchtime, and then watch for end of day potential breakdowns or spike rallies. You just got to really look at it and start watching for how price action and tick diverge. So let's say we start breaking down in the tick, but the price is climbing. That's a divergence, and we're running out of momentum. So that means for shorter term time frames, I'm going to edge up any trailing stops and look more aggressively for topping patterns or hitting key intraday levels or harmonics, and to unwind positions. Because the tick's breaking down, the rally continues. Conversely, we're selling off and the tick starts moving on up from the lows, making higher lows, we're running out of downside momentum and we're starting to build potential bases. The best thing to do is watch price action on a 5-minute or 15-minute versus the tick on those same time frames. Okay? All right, with that, gotta call it a day. I'll see everyone tomorrow for Friday. We have consumer sentiment. Only key things after close, Restoration Hardware, and for the higher end consumer, and Adobe. So we'll see how those reportings go. And with that, I will see everyone tomorrow. Thank you for tuning in. Bye for now.